The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
All right, we're on. I'm sorry. Okay. Now, there it is. Hit the button by mistake. We do have a mute button here. I'll run the whole thing again. Where did I go? Oh, it's there. It is. What a silly place to put the mic. There's a new headset that I'm trying out. All right, we'll do it again. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, this being the 24th of April. The Dow is up 1, S&P is up 3.8, so the Dow number is 18,058. Remember, 18,288 is the number to break for a new all-time high. S&P did make the new all-time high. Maybe I'll do it with this. Let me just do this together, and we can do it being Friday, Technical Friday. I had a couple of questions I'll cover. Look. Here's the Dow holding the 9-period moving average, really not very strong. And if you look at my Dow Quartet, which includes I call it my Dow Quartet Index, GE, lousy action right here. Couldn't hold their 28.68 spike on the sale of their properties. Now back down 26.78, right underneath the 9-period exponential moving average. IBM had a spectacular session yesterday. It was up 5 or something. It's at 168.83, down $1.41 at a potential peak E. This is why I'm a little bit cautious here. You've got Triple M got smacked yesterday. One of the best stocks. Not MM, but Triple M. Oh, I looked at MM last night, holding very nicely. Triple M is down 68 cents at 158.98. Now let me just move this. This is a peak D in the weekly chart. It is a potential peak D in the monthly chart. Got to take this very seriously. These are major big cap stocks, worldwide international stocks. UTX is my G is my near-term pilot light indicator, and UTX is my more intermediate term. Made a peak D top at 124.45 way back in the week of the 27th of February. Remember, the Dow made its all-time high March the 3rd. So this is coincidental, and it's saying there's internal weakness to my Dow Quartet. This is not a good sign. Made a cup formation breakout, didn't hold it, pulling back underneath the 120.66 high that was made earlier. That was back in, when was it, 120? At peak F, exactly a year ago, April a year ago. It pulled back sharply from 120.66 to under 100, then spiked up to 124.45. Now is at 117.04. Not a great sign of strength here. That's not to say they can't be flourished to the upside. Why? Because of this. The comp index has gone to a recovery high. It needs to go to 5,132, the all-time high back in March of 2000. It's at 5,094. Really nice action. Leg C up in the daily, leg E up in the weekly, and F/B in the monthly. And I mentioned the other day, I often do this, I say, in the monthly chart, I don't even care what the letter is right now because the technicals are so strong. I got an email saying, hey, we take the notations very seriously. What do you mean you don't care? What I meant was, of course I always care, but it is not anywhere close to being as important as the nearer term, because the rudder of the daily leads the weekly. The movement of the weekly will affect the monthly chart. That's what I meant. So I don't have to worry right now whether it's an F or a B. I will start to worry when I finally see a failure in the composite index, and then I see a failure in the weekly chart. That'll be something serious. All right? So that's what I meant. Now, here's another thing. The IWM was acting very well, but now it's just holding the 9-period moving average. It's up 0.02 at 126.30. It's really not showing the kind of strength you would expect. I've got an alternate count, an F/B in the weekly chart, and a leg D in the monthly chart. I'm watching this one very closely because of a couple of patterns that could be formulating. Now, I'm going to show a couple of other things just now, but let me go to the QQQs again. Just wanted to mention that break in the cup formation is a Chapman wave cup and ladle breakout, which says that you invariably will go to a leg D, maybe even an E, but at that point, when you get your sell signal, you come back and you retest the lip, which would be at 109.42. It's at 110.39 right now. A couple of things. We've got, the New York Stock Exchange, absolutely. NYA.X made a leg F/B this is only an F/A. In the daily chart, it broke out in the weekly all-time highs, leg G/C, and the monthly chart has made a very quick series of A's. E to F at 11,108, plunges down to 9,886 October, and this past October, and then rallies quickly to an A, a B, and it's in leg C. These very quick scurries to the upside, especially 1 month apart or 2 months apart, hint that when you get to D, you've got to be careful. It doesn't mean that D is a major top. It does say when you get to leg D and then peak D, you can expect a price pullback. That is probably one of the more significant ones that you've seen in the past 7 or 8 bars. That's really what it says. That would be past 7 or 8 months. Now let's go to, gold. GC, I've got the gold contract right now down 1650 at 1,177. Remember I spoke about the arch formation, how devastating that it just puts such a cap on the upside. That's really what it does. It doesn't mean to say always that you're going to break to the downside. It does mean to say that you're going to watch those arch formations. I'll be talking a lot about these formations. Remember, I typed this in over a year ago, and look what's happened right here for the GLD. And this is exactly what's happened. Remember, I typed this in way more than a year ago. It's almost 2 years ago. There it is. Back in July of 2013, I typed in the H pattern. They can go to a continuous lowercase M-shaped pattern. I have a webinar coming up. It is one of 2 45-minute webinars for subscribers. Now, if you aren't a subscriber, it's very easy. All you need to do is you need to go to TFNN right there. You need to go to free webinars. You need to just go to the front page of TFNN. You can sign up to get my newsletter for the next month, a really important month coming up. Why is it important? You've got the match with the UK index, April to April. This April is going to be very important where it closes. We'll have closed April on the month. We'll have a few days. It's really good to start off the few days of the next sequence of the candlestick bars. And that's what we'll be looking at. We'll be looking at that on this coming Tuesday night, April the 28th, the essentials of the Chapman wave. That'll be 5:30 to 6:15. And then I'll follow up because that workshop will go into what we can expect in terms of the close for April. And then perfect, because in May, we'll get the close of April and we'll see whether the Dow has made an all-time high or whether the consolidation that I was talking about from the February 19th, May February 19th, 1929 parallel match with the socioeconomic political period that we're in now, and to that period, we'll have almost 3 months in which to discuss what has happened. Has there been a rotational correction that's completed? Are we ready to move sharply into new territory? Or are there enough sectors like semiconductors, maybe the biotechs, that are starting to pull back enough to take us down deeper? And then later on, we get this big move up that I'm expecting, a climactic coda to this whole mega bull market that we've been in. This is such a fascinating period. I'll talk about the VIX. I'll talk about a whole bunch of things, and they will apply to the Chapman wave methodology, the essentials of the Chapman wave, the notation. It's only 45 minutes, but believe me, I can cover a lot in 45 minutes. Because it's archived, if you aren't able to be there, but you do want to sign up because you'd like to get it, you'll have plenty of time to go through all the information. Of course, I follow up all the time in my daily newsletter, very comprehensive look at the markets. Now let's go back to what we were talking about. You can go to the front page of TFNN, sign up. It's really, I'm so looking forward to it because these follow-ups are very important because it checks where we were, how we're doing. Has it been a correct call to say that we're going to have a consolidation over the coming months? And what's happened with the breakout with the S&P and the Qs to the S&P's all-time highs, the New York Stock Exchange all-time highs. The Qs have not made all-time highs, and the composite hasn't yet made an all-time high. So let me just do a couple of things here, and then we can go to our callers. So gold could bounce a little bit. The GLD is down 113.13, but you've almost got your one. You have got your one-to-one to the downside, pretty close in the GLD. This is a propeller shaft from that high over there. I'll do a little bit more work maybe later if I get a chance because I've still got questions to answer. Just want to do the dollar DXY, and then we'll talk about bonds. The TLT is up $1.14 at 129.41, and the dollar is in the second U formation. It's the inversion of the lowercase h pattern that can go to an M. This is a soft W formation, two U's put together. And look at the way the MACD and stochastic are quite negative, and yet the dollar index has not taken out the low of 96.63 that was made in March. It could still do it. I'm just saying right now it hasn't. And that rectangle high-level consolidation I've been talking about is still unfolding. In the weekly chart, I believe we will make a peak in the monthly chart, and that's going to be a real test for a lot of things. If the dollar does start to pull back, we'll see if gold rallies, and gold might rally if there's sudden bad news. Remember, markets cannot go down and stay down unless they have bad news and a high VIX index, and that VIX right now doesn't look like we're going to get a Friday spike just yet. They tried. They went to the 9-period moving average. Now it's back down at 12.36, down 12 cents. I'll be back. Basil Chapman will be back with Brent in Martinez, California. Straight after this break. Dow's up 11, S&P's up 5.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 27th and May 5th that only subscribers to his opening call will gain access to. On April 27th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 11. S&P's up 4.9. Struggling after making an all-time high yesterday. Then S&P, I'm going to show you something in a short while. I still want to get through some of these calls and questions. Very important to do that. First, I'd like to go to Brent in Martinez, California. Brent, Mr. PBR, how are you?
Good morning, Basil.
You're doing okay, I bet.
Yeah, I'm doing fine. It's good to talk to you again.
Good to talk with you.
Can you hear me okay?
Yes, I certainly can.
Okay,
You'd like to look at...
We were kind of discussing it yesterday, and the conversation was cut a little short. You had to take another call.
Right.
You had asked if I still have my position at PBR, and the answer was yes, I do. I have. There was some of it I did sell, but I had $4 calls, which I've made enough on some of the other options to pay for and buy, exercise those options and buy at $4 a share. So I have a good-sized position at $4, and I still have some options left.
Excellent. So this is very interesting. Excuse me. If you're looking at my charts, the left chart, folks, is my daily chart with the Chapman Wave notation. You see that little circle over there? That's called the Chapman Wave Instant Restart. When I do my webinar on Friday, I'll just touch on the Instant Restart because it's so important what to know what to do at those peak Ds. And what's very important here is that the weekly chart has got a single leg A to the upside. Stochastics finally gotten to 83%, over 80%. That's good. The MACD is very good. The monthly chart is still just a terrible looking chart, but it's being helped, of course, by the shorter term, the daily and the weekly. So we won't discuss that other than to say it is above the 9-period exponential moving average, which looked like it would be impossible when it was down in the $6 area. Now it's $4 higher, and that's really important. What it's saying is that there's enough strength here to say that the $7.62 9-period exponential moving average in the weekly chart between 835 and 763 should be very strong support. But on a very short-term basis, I would not be surprised if PBR is really close to some kind of a pullback to test 967. The low today is 972. $9.67 is the 200-period exponential moving average, and $8.88 to $8.45 are two moving average support levels. My thinking here is that by next week, probably about midweek, we should see a test of at least the between 890 and 840. There should be a test. If in fact there's a test that fails and PBR pulls back, you've got a lot of support. I believe that is the 21, yes, at the 21-day moving average, which is at 799. But most, excuse me, most importantly, it is this weekly chart. You know, I talk about a single leg A phenomenon. When you get a powerful move to the upside that has no stopping points, in other words, there isn't, every single bar has made the previous week's high like a base, and it's done that since the 27th of March. The very next week, the 10th of April, you started holding the 9-period moving average, springing off it, then using, sometimes even gapping up. Look, the close of the week of the 10th was 775, and the low the next week was 778. So this is something that I'm going to be watching really closely, because two things are happening. One is a short covering, but another is that there are internals based on all the announcements, etc., with PBR, which makes it appear that they're now clean, they're doing everything right, everything's turned around, it's just on its way to the moon. But I would do this. I think that your idea of taking off, keeping some, having a fresh look at it all the time is very important. And I believe that the gap from yesterday's high of 952 to today's 972 low, I believe that gap will be filled. And if there's a close below about 929, 930 by Tuesday, you'll start to see this. You'll start to see some kind of a consolidation. All I can say right now is expect a consolidation. I don't expect to have the test of the single leg A up in the weekly chart to be resolved to the downside just yet. I think there's still enough upside. I think the big surprise was that the day before yesterday, I saw it up 25 to 27 cents, and then it was down 45 cents, closed sharply higher. Can you hold on to Ted? Because I want to look at this a little bit more in context with others. Okay, we'll be back with Brendan Martinez, Basil Chapman, the Dow's up 30. We'll be right back straight after these important messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back with Brent in California. We're looking at PBR. Let me just get, and PBR is a good proxy because I also wanted to put up the Brazil iShares Brazil capped ETF. And that's in leg G/C in the daily doing very well. And it also has that single leg A up. So they are paralleling. And I think within the context of what I said about PBR, probably it relates to the EWZ as well. Big question is, has Brazil turned the corner, the EWZ? Has this turned the corner so that the weekly now is forming good MACD and stochastic turnaround support? You've got a buy signal. I would even say that if it wasn't leg E, if it was leg B, I would have called this a potential buy signal that is really close to a buy mode. But being just A, I have to have the patience before I actually label it. So it's just the first decent leg up. And if the EWZ crosses 38.20 and closes above it, I would not be surprised, because they're moving together, that PBR closes above the candle. I think I mentioned it before, 11.13, way up there, the high of the 28th of November. So I love what's happening right now. By any means, it's just a little bit stretched in the daily. The weekly, I can't say it's stretched because I have to first get the first pullback, and there hasn't even been a pullback yet. And the monthly is just turning up. But most importantly, The way I'm looking at it, if it's going to be more an intermediate term hold, buy and hold, they can go into, what are we in, April? If it can go into, say, the third week to the first week of June, end of June to the first week of July, then what you're looking at is that whole area in the low 8s to the high 7s should be very good support. That's the way I'd look at it. I hope that helps you.
Oh, it always does, Basil. Just a note that Vail is also a Brazilian company.
That's right. I forgot it was Brazilian, and it's what a spectacular day. You got this as well, trading at 778. There's a little bit difference in the chart formation because this is such a big gap to the upside. But at the same time, everything I was saying applies. Most importantly, you really want to see Vail close above the 813 high that was made on the 18th of February. If it can do that, that would be a sign of strength that raises the base of support. That's the way I would look at it. The base of support there is a lot lower down at 685 to 658, but the same thing would apply. If next week you start to see consolidation, then I'd be looking at the 680s to 650s as being very important support. That's going to be the big difference. How they pull back and how they recover to make the next leg up in the weekly. Good. Thank you.
I went ahead and took some profits on Vail this morning. I don't want to get too greedy. It's up 30% in 3 days.
Whenever you see that, you want to at least make sure that you're still handling it as if it's a money-making proposition. You don't want to treat it as if it's a gift that you can just throw away if it doesn't work out. You want to treat it in a very business-like manner, and you always do. Good.
All right. Well, have a great weekend, Basil. Just one quick thing, too. You're talking about the excessivity of that we're in. I don't know if you've seen that 100-carat diamond they're toting around on CNBC.
About a week ago, yes, I saw that. That was huge. I don't know what it did. It sell? They said it would be what, 15 to 20 million or something.
I think Sotheby's is going to auction it. Yeah, but I saw that, and I saw you and your 1929 parallels.
Okay, just remember, if your Vail goes to 30, you put your bid in for the diamond.
I'll do that. Then we'll split it in half. We'll turn it into a 50-carat. I'll give you the other half.
Thank you. This is on record. We've got you down. Thank you for calling.
Have a great weekend, Basil.
You have a great weekend. So
take care.
Let's have a look at a couple of things here. So Starbucks was my first email of the day. Starbucks, when I look at Starbucks, Starbucks, the moment I saw the news and it was shooting up, I said to myself, wow, I must look at Starbucks because perhaps the gap up today after the good news would be a shorting opportunity. And then I saw that the safest way to counter it right now is to say if it gaps up, it's in leg C, which would coincide with what we're looking at in the Qs, the QQQ series, and that would say to me, don't try to short the very best on earnings news unless the earnings news has some kind of a disappointment built into it that is not being noted. I didn't have a chance to listen to anything, and I just didn't want to do any fundamental work. Oh wait, what am I talking about? This is leg B. That's not a peak. This is leg B. So it's G/. Oh wait a minute. Just as well I looked at it. I could call this A, B. It could be, I'm going to be conservative. I'm going to call it C. Just for now, because there's an alternate count that could be made right there. So that's A, B, and maybe that's C. I want to be a little bit ahead of the game on the lettering. I don't want to be surprised that I missed something. So let's just call it for now leg C. We're watching it. But yes, it's great. If you have it, I would not be looking to short it. This is not a short at this particular time. This is what John Logan would say. He'll say, this is not a short at this particular time. It might not go up, but it's definitely not a short. In this case, I do expect it to go up a little bit more. Look, it went right through the resistance of 49 that's on this particular chart, and there's nothing now to show that there's resistance. Starbucks still looking good. It's one of those stocks that fund managers will gravitate to as a leader. So I'll be looking at it on the short side. I always look at it on the short side. Don't do anything, just looking. Next question was, real quickly, let me get to this. Maxwell MXWL. Whenever I see Maxwell, I think of Dave White. He introduced us to this particular stock. And let me just check it out here. So don't forget, I've got a webinar coming up. Steve Rose has got a webinar. His is a psychology, really. How you go into your trades and how you plan your trades and how you can have the most comfort and relief in putting those trades on because you are aware of your environment, of what's going on around you, stock-wise or emotionally, etc. And I think it should be a really educational webinar. So 2 webinars, in fact. So check out the front page. I've got my webinar coming up on the Chapman Wave technique, as well as a follow-up for subscribers. Both of them are for subscribers to my opening call. And that will be for the Chapman Wave methodology, some of the techniques that I use that you might want to investigate. There it is. So Maxwell has made a peak D. It's gapped down. Maybe it's bad earnings news. You know what I would say? If you aren't in it, hold off. This is not the kind of stock that I want that it gaps down. I want to see the next bar. If there's an inside bar and it starts to head towards the gap, I might become a little bit interested. But at this particular point, I don't like it. I don't know what the story is, but it made the arch formation. It broke, and we'll see if it closes. If it closes underneath 6.32 for 2 sessions, that's today. It's at 622 MXWL, trading at 6.22, down 96, down 13%. Not sure what the news is, but not good. I don't. If you're in it, I would say the next rally that takes you anywhere to 680, if it can, between 673 and 683, give me a call. If it's next Tuesday, give me a call and we'll look at it again, or even Monday. But I wouldn't touch it right now. Just the weekly chart, not good. Those M formations that break down, don't like it. And look at that Eiffel Tower look in the monthly. No, be careful. Now, quick question. I did the FBF. I think it was FBF. Was that FBF? Oh, my goodness. FNF. FNF. Yeah, the dead question on FNF, that's Fidelity National Financial, trading at 38.68. It's up 1.15. I didn't have a Chapman Wave notation on it. I'll do it quickly. You've got, this is the trough of importance right there. This is the next peak right there, A. B, we're always looking for Ds, and we're in leg D, but a breakout leg D is different to at all-time highs on news on a Friday. This is a Friday. That must be news. All right, I'm going to have a little deeper look at it. There's your A. There's your B. There's your C. There's your, wow, it is almost like the daily E. Okay, I like the pattern. This is another one of those Fidelity National Financial that fund managers will drift to if it's doing well. It's a leader. It's at all-time highs. It's only in leg C in the monthly chart. If you're holding it, don't do anything. In fact, I would just say the most important thing, if you got a core holding, watch 37 to 36 as support. At any point in the next month, within the next month, if it breaks down and goes towards the 36s, give me a call. We'll reassess and we'll see what it's doing. So far, it's acting beautifully. Okay, another question was, I might be missing one. Amazon. Amazon right now is spiked up on a Friday to leg F. That always makes me a little nervous. I was going to say on Amazon, if we have some shorts, and I'm not prepared to overdo the short side because we also have longs. I just don't need this. I'm going to be very careful here. I'm going to say I was looking to see if there was a round number at all to possibly short Amazon as a quick trade to come full a gap. And there was a round number. It opened at round number 439 on good earnings news, I guess. It went to 452. See, how do you short it? 439, you're going to put yourself a 15-point stop. I don't like to do that on a $439 stock. I would have said 5-6 point stop, a buy stop. So that's why I wasn't prepared to play with it. But now we know the numbers. 439 is the round number. 4 was the open. So far, it's the low, and the high is 452.65. At any point in the next 3 to 5 sessions, if Amazon breaks under 439 and starts to trade in the 433, 432 area, 439 is going to be the magic number to watch. But it is a leg C at an all-time high. in the weekly chart, and that does suggest it should go to a leg D as well. And it's a leg F/B in the monthly. So what's really important about this particular period is you're starting to get stocks that have been laggards for a long time, like Amazon was for quite some time, almost 6-8 months. And then it started to break to the upside in the U-shaped formation. Microsoft, same thing. Nothing from Microsoft, one of the oldies, back from 2000. Now all of a sudden, look, Microsoft had a spectacular, on a Friday, gaps up to a leg E. I'm going to have to watch these really closely next week. I understand we're breaking out to new highs in certain cases. But you know what? I still want to watch these very closely. There are signs here of a little frothiness, and even if it's just a little frothiness, there's enough potential to have some kind of a pullback coming real soon. So, okay, that's Microsoft. And the next question I had was, where was it? Let me quickly see. Basil, do you ever visit the diamond mines in South Africa? Danny, as part of the Rotary there in Johannesburg, I went down a mine in the Johannesburg Reef area, the Vaal Reef. I lived in my little mining town that I lived in when we moved from the most exquisite place on earth, Sea Point, Cape Town, South Africa, where I was born. Then we moved to this little mining town as a teenager, got out of there as quickly as I could. Yes, I used to go climbing the stone mountains around the mines, but I also went down, a mile down. I don't want to talk about it now because there's so much to do, but someone remind me again. Next week, I'll talk about how scary it is to be down, a mile down in the darkness with just your little pit helmet on. And that was way back, a long time ago. And it got worse. Now I think it's better, but it was just, if you slip, you go down one of those shafts. There's a hole in the ground, and there are just these tree stumps that keep the ceiling up, and something happens there that you just slide towards that hole, and you go down with a little train. You go a mile down, and then you go along in a train, a little tuk-tuk train, and electric train actually, because they can't have any coal. And it was really, I had admiration for those miners. What a thing. And the coal miners down in Pennsylvania, all over. All these miners, let me tell you, what a terrible, terrible job. Okay, well, let's go on. We're looking at CRR. Let me just check that out. CRR is Carbo Ceramics Inc. Yeah, I don't touch these things, but I would say that if it starts to form a base, it's the 31.57 CCR down 129 to 31.57. First of all, if you have it, you want the next bounce to start thinking and raise your stop on the next bounce, because you want it to start coming out, peel off a third, and then maybe another third, another third. I don't like this monthly or weekly at all, but the 31 to the 30 to 29.35, if that goes at any point in the next 2 weeks, this thing is a goner. So just please be very careful. This is sometimes a very bullish formation, but not when the weekly and monthly look like they look. Sorry. So let's see. Ruba. You know, we look at this every once in a while, and then I forget all about it. Ruba, look at that stock. Ruba is 58.com. I never remember what it is, and I always forget to look at it. Ruba, very good. Oh, this is just spectacular. It's recycled, so this is A, B, it's in leg C right now, in the daily, leg B in the weekly. And you remember I spoke about it being in the monthly, only leg B. Wow, this is a powerful stock. Hey, hold it, keep it. It's looking great. Yeah, it could pull back to the 73, 71 area, but it's looking good.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Folks, we're back. So, asked about wood, which is iShares Global Timber and Forestry ETF, trading at 55.10, up 81 cents. Made a peak E in the daily just recently, but it's the weekly high that was made back on the 27th of February at 56.69. And the weekly chart is really suggesting that it's going to make an H pattern in a leg B, maybe a peak B. Goes to a peak B minus. Now, this is very interesting. Well, let me just show you something here. This is a technique that I developed a long time ago, 7 years or more. I had someone write me some software for it based on the Chapman Wave methodology, some of my techniques. I wish I could remember it. He has left Boston, and I haven't got the details. But I only use it every couple of weeks, I'll just pull it out and say, hey, I need to check things. Look at the resistance levels. You see these green numbers over here. This is the S&P. And you see just one support at 2066.99. Look, 2107, 2106, 2112, 2124. Those are the resistance levels, and they've been it's a very strong resistance area for the S&P. Here on the 120-minute chart, it's all the way between 2112.50 to 2120, even 2127. So I'm going to be watching this really closely. But look at the weekly chart. Look at that cluster formation right there. That's saying to me, if the S&P actually breaks out and goes into the 2124 area, just another 7 points, wouldn't be a big deal. It'll be a big deal here because it's suggesting we could go all the way to the 2140s. But it hasn't been able to do that yet. And even today, with all the good news and breaking to new highs yesterday, we've got ourselves a pretty flat market. And that's what I call the rotation. When I spoke to you about my Dow Quartet Index, GE, IBM, Triple M, and UTEX, which I've had for, I don't know how many years, 15, 20 years, maybe. Oh, actually, it goes way back. And then I'd add gas artists like a DuPont or a Caterpillar to the mix. But that to me says it's very important to be watching what happens here. I don't want to make myself out to be a big bear, but in fact, there are some areas that are not working, and I want to focus on the areas that are not working, and I'm going to be very focused on those. Let me just show you something. One of the indices that I use that nobody even looks at anymore, it's the XMI. It's just 20 stocks, and it's a very nice mix because it has defensive and cyclical stocks in it. And look, it's a whole bunch of resistance. I didn't expect to. I hadn't even pulled it out for a while, and here it is. Look at all those resistance levels. So it means that if we take out those resistance levels, this is a little bit like John Logan's work. It isn't anywhere close to what he does, and the relationships are not. But what it is very close to is identifying areas of support and resistance that are very important in the methodology that you use. And in this particular methodology, I believe it was based on the MACD and the slow stochastic. Look, you've got yourself a whole bunch of resistance right there. And this is what we're testing. So the question was, would I look at the VIX index? And absolutely. Using this system, 11.60 to 11.67, these are support levels that we're getting to. 1225 is in the 120-minute chart, then 1220, then 1179, 1220. There's a whole cluster area at the bottom. This is suggesting to me that we might be looking at fairly limited upside at this particular point. But if there is a news-related break to the downside, now let me just go back to my usual work here. If there is a fairly big story that comes out in the next few days, I don't know what it could be, international, national, chickens, who knows what it is. Whatever it is, it doesn't make any difference. The VIX has to be climbing into the 14s and then into the 15s, and the bad news has to come every single day. Otherwise, you will not sustain a down move. But that doesn't mean to say you necessarily have to break the upside. We could continue like this chart shows right here as we close out. Have a great weekend. Stay tuned for Nico and Paige as I can show you right here. You can stay in a range. Look at
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.